Today, we're giving Claude a 15 million euro challenge. Imagine that tomorrow you have an investment committee and you need to decide whether to invest in a new orange juice production line. So I asked Claude to build a full financial model for this 15 million euro investment. Revenues, costs, IRR, NPV, working capital. And then I did what every serious CAPEX committee does. I tried to break it. I stress tested the model to see whether the investment still makes sense when reality hits. So the question is, will Claude pass the investment committee test? I'm Alexandra, an ACCA qualified transformation leader. I've led more than 1 billion euro in enterprise transformation programs across capital-intensive organizations. On this channel, we test AI the way CFOs test investments against numbers, risk, and measurable ROI. Let's see what happens. Okay, so we're opening Claude and I'm giving him a task of being a financial analyst and producing the business model in an orange juice production line. Our output should be NPV and IRR. Well, after 8 minutes of thinking, it produces 4 sheets: assumptions, profit and loss, cash flows, and a summary. So this sounds reasonable. And now let's see how it approaches the task. I see it has broken down the task into subtasks, where we even have the task to write the Python code to produce the Excel. And we see that it has spotted an error in its thinking and it improved itself. And in total, it produced over 400 formulas. So after a couple of minutes of thinking, it produced a full Excel sheet spanning across 2025 and 2036, outlining key financial categories like the volume and capacity, the installed capacity, the effective capacity, including downtime, which is reasonable, the ramp-up factor, because we know that the production will not be full capacity from day one, and the production volume, which is an active formula, which is important for me. Now we see the assumptions regarding selling price. The price rises over time, including inflation, and the total revenue, which is also an active formula, which is great. We see the subcategories of costs, total variable costs and total fixed costs, all active formulas. So whenever we change anything, the outcome automatically changes. We see key financial figures like EBITDA, EBIT, and net operating profit after tax. So these are all important considerations that need to be taken into account. And also the cash flow modeling, which is good. The investment is in year 0. Now we switch to the assumptions tab, where we see all the assumptions made. And now I check whether this tab links to the assumption tab. Yes, it does. So whenever we change anything in assumptions, the model updates automatically. Now we have the summary tab. So the net present value is 32 million euro and the internal rate of return about 35%, which is a bit too optimistic, honestly speaking. So the investment decision would be go. So, okay, now let's stress test the model. So I asked Claude to give 2 alternative scenarios, lowering demand by 10% and by 20%. So let's see how it approached this task. It thought pretty quickly, I must say. Now we have 3 scenarios, the base case scenario and the alternative scenarios, and the NPV calculated. Well, all of them are very optimistic, a bit too optimistic to my mind. And we see it produce these recalculations in a separate tab, just reducing the revenue. So I would say it's a rather quick fix instead of producing separate tabs for each of the alternative scenarios. But it's fine for these assumptions. But okay, normally you take these numbers and go to the CAPEX committee to persuade these members that these calculations are correct. So now let's ask Claude to prepare a PowerPoint presentation for the CAPEX committee and to use the add-in to PowerPoint, the Claude add-in. Now, after a couple of minutes of thinking, it produced the PowerPoint presentation. It has 10 slides, and we see that what they are. Oh, well, the opening visual is pretty heavy, so I don't like it. So it would need to be changed. We have the executive summary, which is great because normally it's the most important page the CAPEX committee looks at with key figures like NPV, like IRR, the payback period. We see the assumptions made. That's correct. They would be discussed for sure. We see nice graphs. I like it that revenue and EBITDA is shown over time. And also we have the pie chart with the cost subcategories. So it's also nice because we would challenge that for sure. We see key metrics like IRR, NPV, and the payback period. That's fine for me. And also I asked to stress test these scenarios. So we have the base case, we have scenario A, scenario B. All these outcomes are very optimistic. I also asked it without giving any assumptions about the risks and opportunities. And when I read them, they sounded very, reasonable, both risks and opportunities. And we have the final slide. So did Claude pass the investment committee test? Well, in my view, partially. It built a surprisingly solid first version of the financial model. The structure was correct, the assumptions were visible, and the economics were internally consistent. That alone can save finance teams hours of work. But here is the important lesson. AI can build the model, it cannot own the investment decision. It does not understand strategic context. It does not challenge unrealistic assumptions. And it does not sit in front of the investment committee when the difficult questions start. That responsibility still belongs to finance leaders. What AI can do, if used properly, is dramatically accelerate the analytical groundwork, which means the role of finance is shifting. Less time building spreadsheets, more time challenging assumptions, stress testing risk, and allocating capital wisely. And that's exactly where finance creates the most value. If you found this experiment useful, subscribe to the channel because in the next episodes, we continue testing AI against real finance challenges. Let's see where AI truly helps and where financial judgment still matters most.